Live analysis now with Aaron Anderson. He is Senior Vice President Research at Fisher Investments. He joins us live from San Francisco in the great state of California. And Aaron, I wanted to get into some of your recent market thinking because you're sounding a little more optimistic than some others on the street. Actually, you say investors need to be positioned for what will be an eventual equity market turnaround, which tells me you think we might have found a bottom. Where are we at right now?
Well, nice to speak with you, Dan. I think you're right. We are optimistic looking forward, and I don't know if we've seen a bottom or not, but certainly I think we're getting close. I understand why the markets have been as volatile as they have been. There's a lot for investors to worry about today. You've got geopolitics, you've got inflation, you've got monetary policy, you've got spiking resource prices. And I think investors are having a difficult time getting their head around all of that. But I also think it's important for investors to consider how much of that is reflected in equity pricing already. I mean, depending on the category you're looking at, equity markets are in near bear market territory or well into bear market territory. And so I'd say that a lot of that fear, a lot of that uncertainty has already been reflected in equity pricing. And as we look forward from here, while certainly the world is an imperfect place, there are things to be concerned about. I think there's a lot more potential for upside surprise than downside surprise from here. So now I think is the time, whether or not there might be a little bit more downside ahead still, or whether we've actually seen the bottom already, I think now is the time to be preparing for eventual rebound.
Okay, so one way to prepare for that rebound, in your view, is to look at growth stocks. But Aaron, how can investors position in this environment when you have a top macro meteorologist like Jamie Dimon saying the hurricane is coming?
Yeah, it's quite an image, isn't it? I don't know that Jamie Dimon was necessarily saying, and this is just my interpretation, but I don't think he's necessarily saying everybody brace because the hurricane is about to hit us. The way he described it was, there are problems offshore. They could potentially make landfall and cause problems. But I don't think that that is a foregone conclusion at this point. And we see a number of reasons to think that the economy can weather this storm, whether it's a hurricane or not, a lot better than the market seems to be anticipating today. I think investors ought to think of the period ahead of us in a couple of phases. One is just the rebound phase. You mentioned growth stocks, value stocks. There are many categories of stocks that have been hit pretty hard in this downturn. What you almost always see in the rebound phase is that the categories that got hit the hardest often bounce the most. Now, there is a lot of growth in that. Technology, other categories of growth companies have been hit hard at the downturn, but so have some parts of industrials and financials and other value categories. So I think in the immediate period ahead of us, it's less about growth, less about value. It's more just preparing for a rebound. And often some of those real hard hit areas of equity markets are the ones that rebound most. But I think you're right to say, as we look beyond the rebound and say, what is more of the trends going forward? What's going to lead once we get beyond just the rebound phase? There we do see a good environment for growth, continuing the leadership that they've had over the last several years. I think in a slower economic environment, and with inflation eventually moderating here, with what should be an overall benign interest rate environment, I think that sets up pretty well for growth companies.